Did you know that there did Hello, everyone. Sorry about technical issues today. Did you know that there's a cool way to be able to get money for your business that you can get approved for, even if you have bad credit, even if you don't have collateral, even if you're a newer business, even if you struggle to get financing before? Well, there absolutely is. It's called cash flow financing. And today I'm going to teach you what cash flow financing is. We're going to talk about how it works. And I'm also going to tell you the exact sources you can go to actually get approved with cash flow, based on cash flow, even when you can't qualify for a lot of other different types of financing. We've got a lot to cover today, so let's dive in. First of all, let's talk about fundability. Before I like to talk about any financing, I at least like to hit this point because, look, the majority of applications that are denied for credit and financing, it's not because you don't qualify. It's because lenders think it's fraud. It's because of other factors where you just don't look credible. So you've got to fix those things. It's called fundability. We're not going to dive into that a lot today, but if you go to youtube.com/credit suite, you're able to quickly tap into fundability and see with fundability what needs to be fixed and improved so you have the best chance of qualifying for the most money for your business. Now, there's 3 different ways to really get money for your business, and this is what it all comes down to. We call it the 3 C's, or 3C cash acquisition formula, because it used to be that back in the day, if you wanted money, you'd have to go to a bank, and traditional bank, and get money from SBA. You'd have to have really good credit. You'd have to have collateral to offset your debt. You'd have to have cash flow verifiable per tax returns and bank statements. And if you didn't have that, then you wouldn't qualify. Well, then the 2008 mortgage crisis happened. Then Dodd-Frank came around and made it harder for traditional banks to lend. And then we started to see this opening up of these alternative forms of getting money. And now, as we sit here and look at the lending landscape for businesses, over 90% of capital no longer comes from SBA. It's actually estimated over 95% of financing no longer comes secured by SBA. It now comes from these alternative lenders. What's different about these alternative lenders is the ease of being able to get money. It's just way easier to get money than it ever was 10 or 20 years ago, because instead of you needing cash flow, credit, and collateral, you only need one. Now, to get most financing that's available in the alternative market, you don't need all things to be strong. You don't need to have business plans and strong personal credit and strong commercial credit and collateral and verifiable cash flow for tax returns for years that show profits. All these things that used to hinder our ability to get money really they're no longer there. Now what happens is you can focus on a strength. And that's what the key is to figure out what the strength is in your business. It's typically one of these C's. It's cash flow. You have regular money going into your bank account for your business, or you will after you get the business started, or collateral, some kind of asset that you can serve up to a lender as collateral to offset their debt, or good credit. Maybe you have good business credit. Maybe you have good personal credit. You can use those to qualify for financing as well. You can even build your business credit and use that to qualify for money. But it really comes down to one of those pillars. You kind of have to look at what the strength of your business is, or the strength you want to build in the business, and any of those strengths open up capital for your business. Red Fox, what's up? Thanks for coming in. Bismarck Sanchez, hello. Thanks for tuning in. And Steve, thanks for coming in as well. So cash flow financing is that 3rd C. So you don't need collateral to qualify. You don't need good credit. And if we go back to this 3 C's formula, the nice thing is cash flow, credit, or collateral. You only need one. You don't need the other 2. So if cash flow is a strength, you don't need collateral, and you don't need to have good credit. You can get this with bad credit. You can get this with no collateral. It's completely unsecured. You can get it just because you have consistent cash flow. It doesn't even take a lot of money come into your business to be able to get approved. So cash flow financing is really financing it's issued that's backed by your expected cash flow. Now, here it says a loan made to a company, but look, some cash flow financing is not even loans. What you're ultimately doing is selling future cash flow at a discounted rate. That's what the actual terminology is. So a lot of the cash flow financing is not even a loan. It has to be paid back. It's actually taking the fact that you have consistent revenue. Lenders look at that. You sell them a portion of the future revenue at a discounted rate, and they take their money back daily, weekly, or monthly until they get paid back. So it's a really easy way to be able to get money based on the fact that you've had consistent cash flow in the past, and we project that you will have consistent cash flow in the future. Now, sometimes with sources, you got to be in business a few years. Okay. But in a lot of cases, some of the financing I'm going to show you today, you can get if you've only been in business 3 to 6 months. You don't need to be in business a long time. Okay. And a lot of lenders might have credit score requirements. A lot of them don't. A lot of them, their minimum credit score requirements 500. a lot of other sources don't have a minimum credit requirement. So no matter how bad your credit may be, you're still able to get approved, even if you've been in business for 6 months or less. It just comes down to you having previous historic cash flow that they can look at. So let's look at some specific sources, because today we're not going to just talk in theory about types of financing are available. I want to actually show you some of the best sources out there that if you have consistent cash flow to get approved. So if you attended our Funding 30 challenge weeks ago, you should have, because it was phenomenal. And in that group, people are still giving their approvals of all the money they got during the challenge. If not, go to creditsuite.com/EIN, grab our free business credit building guide, and we're going to let you know when our next challenge is going to be. It's probably going to be in June or July. So this was the #1 source that got the most funding during the challenge. Of all the lenders, we brought over 20 financial experts in. We talked about over 30 different funding products during the week's challenge. And Fundbox was the one that overwhelmingly got more approvals from those in the funding challenge than anywhere else. And it is one of my favorite funding options of all time, probably one of my 1 or 2 top, because it's just easy to get approved with. So Fundbox has 2 ways you can get money. They plug in and look at your cash flow, or they look at account receivables. We're not going to talk about account receivables today because that's more collateral-based financing. That's the second C. Today, we're going to talk about cash flow-based financing through that product that they offer. So you're able to get approved for as much as $150,000. What's nice about Fundbox is they use artificial intelligence. So they don't need all these bank statements and merchant account statements, all the stuff that most lenders need. All you have to do is plug in your bank account when you go through to get underwritten. Then they actually use their crawlers to underwrite the file electronically by looking at how you manage your bank account. And if you qualify, well, there's a good chance you can get approved and get your credit line within less than 24 hours. So you're able to get approved and get your credit line in less than 24 hours. And again, personal credit really doesn't matter. It just comes down to having consistent cash flow. You can get approved for up to $150,000. They'll plug right into your bank account. You can get approved at creditsuite.com/Fundbox. And let me show you what they are looking for. Most of those involved with cash flow financing are looking for the same things. They're looking for how that you manage your bank account responsibly. That's it. So when we look at lending, when we look at getting money from a private lender, a traditional lender, whoever it may be, the only thing they really, really, really care about is getting paid back. It's all they care about. So when they ask you for bank statements and tax returns, when they ask you for merchant account statements, whatever they ask you for, their primary goal is just to see as much information as they can to determine if you're going to pay them back. So in this case, anything that's based on cash flow, they're looking at responsible bank account management. Now, I define that as what most lenders are looking for. They want to see more money going in the account than going out. They want to see more money going in your bank account monthly than going out. That's called positive cash flow. They want to see a positive ending bank balance, that at the end of every month, you have money in that bank account, that you're not negative. Because if you're negative, well, chances of paying them back are slim to none if you can't even pay your current debts. They want to see that you do not have a bunch of non-sufficient funds, that you're overdrawing the bank account. So if you do overdraw your bank account, plug it into a savings account where that money can come out of, so there's not a bunch of non-sufficient funds on your bank account. They want to see a lot of consistent deposits. Think about a retailer. Think about an e-commerce store where money's coming in daily versus a real estate agent that has money come in 2 or 3 times, possibly in a month, maybe. I talked to a real estate agent the other night when I was out in Tampa, and she's done 6 transactions over the last year, right? So that's 6 deposits in her bank account over the course of a year. That's not what they're looking for with this kind of product. They're looking for consistent deposits. But the bottom line is, are you managing your bank account responsibly? You have money coming in the bank account, and then it's accruing, it's building and building, and you don't have as much money going out, and you have positive ending money at the bank at the end of each month, and there's growth. There's more money coming in every month, the month after month after month, or maybe you have a dip a month or 2, and then you go back up. But it's just this consistency of money coming in and your ability to manage your bank account responsibly. If you get that, Fundbox is one of the best I've ever seen for getting a credit line. So they'll give you up to $150,000 credit line, and here's how I've seen it work. Typically, when you go to get approved, they're going to give you less than $10,000. It's almost all the case. Almost everybody I've seen, us included, gets $2,000, $1,000, $3,000, $4,000, $5,000, $6,000, $10,000. Then, if you want more, give them your tax returns. If you have tax returns that show that your business is growing, maybe you've got tax returns the first year, second year, third year in business, give them those. And what we found is that if your tax returns are decent, then they'll typically bump you up from $2,000, $3,000, $4,000, $5,000, $6,000, $10,000 up to $20,000, $30,000, $40,000 credit line. Then kick back and use it. Just sit back and use the credit line that Fundbox gives you. And then about 3 to 6 months in, solicit them for an increase. If you do that, they will bump you up if your business is growing, if you've paid them back, if you've been using your credit line responsibly. So if you look at Credit Suite and how we did it, we went from 6,000 to a 30,000 approval up to 100,000, and our credit line's at 100. We never solicited up for the 150, although we probably will. Okay, I've got a buddy of mine that was in credit repair, wanted a different kind of loan. We put him in this because the rates were way better. He got approved for 6. He also then went up to 35,000 with supplying his tax returns. So that gives you an idea how they work. They'll charge about 0.5% per week, every week the money's outstanding. So the longer the money is outstanding, the more money you'll pay. If you're borrowing on the credit line for things that you're going to pay back pretty quickly, you could pay 0.5%, 1%, 2% interest, super low interest. So I love this credit line. It's one of the easiest to get approved for. It's one of the fastest to get approved for. We see more clients approved for this than any other credit line. This is the only credit line that we work with that every customer that comes to us for funding that even meets the minimum requirements, we send them to. We get in the funding, then we send them in for this program. It's a great way to be able to get a real credit line for your business, one of the easiest I've ever found to work with. You can get approved at creditsuite.com/fundbucks. Now, PayPal has one of the best cash flow financing products I've ever seen. Here's why. You got to be in business 9 months to be able to get approved, and they'll approve you for money that's going through your PayPal account. The qualification is super easy. They don't look at credit. They don't even care about your credit scores. They don't need collateral. It's unsecured. All they care about is the money that you're processing through PayPal. If you're using PayPal to accept your customers' payments, and you've got consistent money going through there, here's what's mind-blowing. They'll lend you up to $500,000, $500,000, and they will give you the money based mainly only on how you're processing through PayPal, and give you as much as 30% of what you're processing through there in a year. So let's say I do, $100,000 in sales through PayPal. They'll give me as much as 30% of that, $30,000 credit line. They don't charge interest in most cases. They just charge one fixed fee. So it's super predictable. You can pay them back on a consistent basis where they take money right out of future PayPal sales. So, getting approved for $500,000, we're just trying to shut down my email real quick because my email keeps alerting me that things are coming in. So with PayPal, it's one of the easiest ways to get approved. Credit doesn't really matter. Up to $500,000, up to 30% of your sales, and mainly only based on how you process your payments through PayPal. It's something you definitely need to consider. Though they'll go as low as $5,000. In some cases, they'll go as high as 35% of your annual PayPal sales. And again, public records, things like that, they're going to search to make sure you're not currently in trouble with bankruptcies, judgments, stuff like that. Square, they will not do a personal credit check. If you have money going to your Square account, you can get approved with them as well. They'll give you $300,000 to $100,000. Okay, and they're going to give you customized offer based on what kind of sales you're processing through Square. And again, they are a flat fee. They're not going to typically charge you interest. And then we've got Stripe as well. Okay, they're going to again give you a percentage of money of what you have going through your Stripe account. Okay, this is in a beta right now. Okay, so you can get a corporate card through them with this program. But again, it's in a beta, so you've got to kind of apply to be part of their beta. But if you do so at stripe.com, they're going to look at your bank account. They're going to look at what you process through Stripe, and they're going to get you an approval for the percentage that you're processing through Stripe regularly. Now, what I like about Square, PayPal, and Stripe is this. You need to be accepting payments from your customers through one of these avenues. You just really should be. Because these are some of the easiest financing that you're going to get of all kinds of financing that exist. Square, PayPal, and Stripe are 3 of my favorites because they're 3 of the easiest to get approved with. They don't really care about credit. In a lot of cases, they don't even do credit checks. They charge flat fees instead of all kinds of exorbitantly high interest like a lot of other sources do. You can get approved for up to $500,000 with PayPal. Some of them, like Square, you can get up to $100,000. You can get small approvals as well, $2,000, $3,000, $4,000, $5,000. It's really easy to get approved. All you have to do is have money going through these sources, and the approval amounts are the highest I've ever seen on a program. 35% of your annual revenue, and you only need to be in business 3 to 9 months, depending on the source, to actually get approved. Really fast, really easy money. So do me a favor. If you're getting value from this, hit the like button, hit the love button, share this with on your social networks, but most importantly, just like and love this. When you do that, the social platforms, show it to more people. We get more people in, we can help more people, and that's my mission in life. Help as many entrepreneurs get capital as possible. So that's the only thing I ask during the stream is if you're getting value, hit the like button, hit the love button, and if you're really getting value, hit the share button as well. So business revenue financing. So this is the main program that started it all. PayPal, Square, Stripe, Fundbucks, they all exist today. Well, in the lending world, because of this program called business revenue lending or business revenue financing. This really is the main pillar of cash flow financing that everything else become a variant of, right? So cash flow financing or business revenue lending, this started it. Then all of a sudden, PayPal got a program, Square got a program, Stripe got a program, Fundbox. All these other spokes came from the hub, the main central point of business revenue lending. And with business revenue lending, again, you're not getting a loan, you're selling your future revenue at a discounted rate. Okay. You can usually get up to about 15% of whatever you qualify or whatever you actually do, 10 to 15% of whatever your annual revenues may be. So if I do $200,000 in revenue with this program, I can usually get up to 15% of that, which would be about $30,000 in that example. Okay, how much you owe depends, or how much you're going to be charging interest depends on your risk. Risk factors include your industry, how long have you been in business, your personal credit score, your business credit scores, how you manage your bank account. Those are some of the main factors that tie in to being able to get approved. And MSP says, Mariel, thanks for sharing, MSP. And Red Fox says, can I get a fleet MasterCard through BP to build business credit? You absolutely can. If you have 8 accounts on your business credit reports, Red Fox, then you will be able to get it without a personal guarantee deposit. If you don't have 8 accounts, I'll probably ask you for a $500 deposit and a personal guarantee, just so you know. And Facebook user says, is G Suite now acceptable in underwriting's eyes? You mean for what? Facebook user just asked me exactly what you're using G Suite for, and I'll be able to answer that question. Okay, so business revenue lending, get approved for as much as 15% of what your annual revenue is. A lot of lenders will lend with no credit score. A lot of them want you to have 1 year time in business, $10,000 a month in annual revenue. I've already talked to you about what they're looking for in a bank account review. If you meet those criteria, there's a good chance you can get approved. Now, merchant cash advances, they are very similar to revenue lending, cash flow financing. What merchant cash advances are, the biggest difference is they're easier to get approved with, is one of the differences, meaning that you only need 6 months time in business, unlike 1 year with revenue lending. And again, you could still get approved with bad credit. You could still get approved with no collateral. And you only need $5,000 a month in revenue to get approved. So you need $10,000 a month for revenue lending, $5,000 a month in revenue to get approved for a merchant cash advance. You need 1 year time in business typically for revenue lending, and 6 months time in business typically for merchant cash advance. So less time in business, less revenue, still get you approved. They work with high risk, they work with low risk. Revenue lending and merchant cash advances go anywhere from 6 months up to about 5 years in terms. You'll typically get a better term if you're lower risk, or if you've already got one of these and paid them back. Typically with a merchant cash advance and revenue lending, when you pay back about half of what you owe, then they'll offer you another advance, another loan with longer term and lower interest. So typically after you get the first approval, you can get a lot more money when you pay that half down, and your payments won't go up a lot because they lengthen the term and shorten the rate. So the key with these is to get yourself in and prove that you're responsible enough to pay them back. If you do that, then the chance is exceptionally well that you continue to get more money. So let me give you an example. Had a lady that wanted to buy a fleet of dump trucks. She came in, she wanted $80,000 in funding. We got her 8 because she didn't have good credit. She didn't have good revenue either. We got her 8. She bought a truck. She put another tow truck on the road. She doubled her revenues. When she paid half of that 8,000 back, then we were able to get her 30,000 additional on top of that. And then as she paid half of that back, we got her another 50, and it continued and continued. And last time I checked with her, she had 8 tow trucks on the road. She went from 1 to 8 tow trucks on the road, and she was just using this to buy more trucks and build a whole fleet of tow trucks that she had on the road. And so she went from a low hundreds of thousands, six-figure business up into the mid 7 figures pretty quick by using this financing to be able to do it. Another example is a client that was a soft drink manufacturer, and he outsourced all the bottling. And so he used revenue lending and revenue lending to actually get the bottling brought in house, substantially increase the profits, and was able to pay this back pretty quickly. Merchant cash advances, revenue lending don't have prepayment penalties, so you're able to pay them back without incurring any kind of penalty. So it kind of gives you some interesting information on merchant cash advances and revenue lending of all the financing in the world for business as well. Let me not say the word. I'm not that familiar outside of the United States. For all the financing in the United States for businesses, This is merchant cash advances are probably one of the easiest to get approved for with cash flow financing behind them. And of course, PayPal, Square, and Stripe come in somewhere in that mix as well. Okay. So terms and qualifying, they're going to typically look at 3 to 6 months worth of bank statements, 3 to 6 months worth of merchant account statements. The thing about merchant cash advances, you're going to get about 15% of whatever you process in Visa, MasterCard sales. So if your business accepts a lot of checks or cash, you're better to go with revenue lending than merchant cash advance. If your business accepts mostly credit cards, like Credit Suite does, then in that case, a merchant cash advance may work better. It's easier to get approved, faster to get approved. And they're just looking at your credit card sales, which works great if you are managing the bank account responsibly and you have consistent credit card deposits coming in. For business, your Facebook user says business email. Yeah, we've still seen in 2020 that for some reason, Gmail type email or excuse me, G Suite type email addresses are harder to get approved with some credit issuers. So it's still something we say to recommend with or stay away from, but you should still be able to get business financing without too much of an issue. But there are some business credit sources that will make it more difficult if you're actually using Gmail email, or if you're not using Gmail, if you're using a G Suite email type address or phone number to get approved with, just so you know. Okay. And is Cabbage now defunct? Cabbage was bought by American Express, Steve. So they were bought during COVID. They did not make it. Cabbage was an example of a revenue lender. And they basically went, they got purchased by, they shut down all credit lines called All Credit Lines Due. And then they were purchased up by American Express. So they still exist under a completely different model today under Amex. Merchant lines of credit. So there's several of these lines of credit that are available. We'll talk about some of them available from Amazon as well. But I do want to talk to you a little bit more about one specific line of credit that came up in 2020. So this one is just based on your credit card sales. You can get approved for as much as $100,000. You do not need a personal guarantee, and it reports to Experian Commercial. So no PG, true credit line for up to 100 grand, and it reports to Experian Commercial, so it helps you build business credit. All they care about is consistent credit card transactions. So if you have consistent credit card transactions going through a merchant account, you can get as high of $100,000 approval if that's what you process in a month. You can get 100% of what you process in a month in a credit line, but that won't exceed 100 grand. So if I do 200,000 a month in revenue through my actual business, I can only get a $100,000 credit line. If I do $100,000 a month, I can get a $100,000 credit line. If I get 50,000 a month in revenue through my credit or through my bank account and merchant account transactions, then I could only get a $50,000 credit line. So 100% of what you process a month with a cap or a ceiling of $100,000. One of the easiest to qualify for credit lines, not based on purpose of credit, doesn't need collateral. It's a great way to go. Now, there's also a lot of these other lines of credit that we're going to talk about today that are available, for example, through some sources. So On Deck had one of the other ones that was one of the best known. Okay, and you look at, they have revenue lending as their first position lien. Then they would give you a credit line for 25 to 50,000 as a second position lien. So that's an example of how some of them will offer merchant lines of credit. So let's talk about this, because this is a whole big thing. So revenue lending will be a first lien, a first loan position, right? There's a lot of lending sources that'll give you a second or third lien behind the first one. So when we look at revenue lending, we don't want to just look at the fact that you can get up to 15% in a loan or a credit line. You want to think you can get about 15% of whatever your annual sales are in a loan. But then there are other sources that will give you a credit line or a loan as second and third position behind the first loan. So second or third loan or credit line that you're able to get a lot more money with. So a lot of them will offer these merchant lines of credit. A lot of other sources will as well. And I told you about one of my favorite merchant lines of credit. Amazon Markets currently is a line of credit offered by Marcus by Goldman Sachs. And you can get your funds within about 5 days. You can access this in your Amazon Central account. It's specifically for Amazon. So Amazon was thinking about creating a marketplace for their sellers on Amazon that you could access of credit lines. But then what happened was, if you remember, Goldman Sachs actually funded the process or the purchase of Whole Foods from Amazon. So when Amazon wanted to go buy Whole Foods, Goldman Sachs was the one that funded that to make that happen. And then one of the side benefits was that Amazon gave them exclusive rights to a credit line to their sellers. That credit line is available through Marcus, and it's primarily based on how much you're processing through Amazon, how much you're doing in Amazon sales, and it's available in your Amazon Central account. Okay, you can loans are coming from Amazon Lending. You can get 3, 6, 9, or 12-month terms on that as well. Okay, and Amazon may review your business credit history to be able to get approved. Look, a lot of cash flow financing, including Amazon's credit lines, they look at business credit quality. So I talk about this all the time. You really need to build your business credit. It makes all these kind of approvals much easier to get approved with. Now, Amazon has a loan as well, and it's available through Bank of America. They launched this in 2011. Again, you can get this in the Amazon Central account. Okay, you can get approved for as much as $750,000 through this. It's, again, based on how much you're processing with Amazon, how much you're doing in sales with Amazon. Within 5 days of being approved, you can receive 20% of your first $500 that you actually get approved with them. And you can get loans from $1,000 to $750,000. So again, the second kind of financing that's available based on cash flow that you're processing as an Amazon seller. Now, the third is an Amazon corporate card. You can get this if you have consistent cash flow as well. You can get this without a personal guarantee, and you can get it based on business credit quality alone if you've built your business credit. As a matter of fact, a lot of our clients get Amazon corporate card as one of the first credit cards they get when they get out of that starter vendor tier and start building business credit. 55-day payment terms, so net 55 terms, 12.99% plus APR depending on risk. And again, you can get this with a personal credit check and as a guarantor, or just based on business credit quality as well. So a lot of great ones to be able to get approved for based on cash flow. So as we kind of recap here, remember, there's a lot of ways to get money out there for your business. Even if you can't qualify for SBA loans, most don't. That's why 95% of funding comes from other sources. And again, you got to find the money that fits your circumstances, meaning where is your strength? Is it cash flow, credit, or collateral? If your strength is cash flow, we talked about a lot of options that will work for you today just based on cash flow financing, or revenue lending. We talked about merchant cash advances. We talked about that great Fundbox credit line. There's also another there's also another one through Bluevine that's similar to the Fundbox credit line as well. We talked about PayPal, Square, and Stripe if you're processing money through them. We talked about 3 options that are available just because you're doing sales on Amazon as well. So a lot of money that's available for you just based on cash flow. But let's not forget that if you have personal credit as a strength, or a guarantor that opens up funding. And if you have collateral as a strength, that opens up a lot of funding. And if you have none of that, that's when you need to accumulate an asset that makes you lendable, such as building business credit, and that opens up funding. So I just went through in a matter of a minute and told you a way that anybody can get money. I just gave you exactly what they look for and gave you the circle to be able to know exactly how you can get money based on your situation. If you do have good cash flow, then again, you want to go ahead and base that as your strength to get money. If not, personal credit, business credit, or collateral can be a strength to get money. And don't forget, we never charge you a dime of money to get money. Time of money to get money. I like that. Okay. Don't get me wrong. Lenders and accredited lenders are going to charge you fees. I'll charge you interest. But when you work with Credit Suite, we can help you get placed with the right funding source. We never charge you any money to do so. Matter of fact, it'll be cheaper to go through us than to go through the source direct, because we fund millions and millions and millions of dollars through these funding sources. So they give our clients preferential treatment and discounts that we pass on and make sure that you get directly. So we will help you graduate you to SBA loans and the better type of loans as well. And again, we kind of develop a business blueprint of what you can get now, what you can get in the future. And we help you do every step of getting money without costing you any money to pay us to do so. And if you want to learn more about that, give us a call for a free consultation. On that consultation call, we'll get your business credit reports for Dun & Bradstreet, Equifax, Experian for free. They'll cost you $250 if you go to the bureaus direct. We go through those with you. We give you tips and tactics to build your business credit. We go through your fundability. We do a fundability assessment, see what's jacked up and wrong, help you fix it to be able to get more money at better terms. And then we do a funding qualification. We worked over 1,000 funding sources, every legitimate funding program that's out in the business world today. We qualify you for all that funding and tell you what you can get approved with. That happens by giving us a call at 877-600-2487, 877-600-2487. Email us info@creditsuite.com, info@creditsuite.com, or schedule a time for a consult at creditsuite.com/consult. Did you get value? If so, just hit the like button, hit the love button. It's all I ask. Hit the share button. It's even better. You're my hero if you're sharing. I love you for that. Okay. And then on top of that, make sure you like and subscribe to the channel you're watching on LinkedIn, Facebook, or you can also do the same thing with YouTube. We go live Tuesday and Thursday at 1, 11 o'clock on Wednesday. Okay. And on top of that, you're also able to access all of our playbacks and a lot of other training at the top right of our page, creditsuite.com. We have daily tips on Instagram, on Facebook, on Twitter. We have hundreds of videos on YouTube that can help you get money for your business. And then we also, on top of that, have a podcast called the Business Credit and Financing Show, nearing 500,000 downloads. So very popular. We have all kinds of experts in their field come in and teach you how to start a business from scratch and grow it to be a 7, 8, 9-figure business. That only happens on our podcast. So make sure you check that out as well. All at the top right of our page, creditsuite.com. Thanks for tuning in. I look forward to seeing you on our next training. We're talking about more cool ways to get money to grow your business